So thank you very much for having me here. As a proud European, I would love that to be the case, and I hope it is the case. Definitely Europe is on a path onto possibly greater growth that we have had for the past 2 decades. Although, as I was saying, the previous Ms. Green mentioning Europe needs to deregulate too. I think that's an important component of what will ultimately push for the growth, which in fairness has been anemic over the past couple of decades. I think from an ECB standpoint, we expect the rates to be around 2% by the end of Q2 and then 1.5% by the end of September. So Europe is going into a certain direction, and there is a renewed interest into Europe from global investors. I'm just back from the Middle East, where there is interest also for European corporates and companies, maybe because they trade at a discount compared to the US peers and so on and so forth. I wish that this is I wish for this to be an historical moment for Europe. And again, I'm proud of my European heritage, so let's see how things go from here.
Well, speaking about interest in Europe, a number of the major PE funds spoke to our colleagues in the US at the Milken Summit earlier this week, and they were saying that Europe is a key focus area for them. Do you expect deal activity to resurface this year, and to what extent do you think PE exits could boost deal activity in Europe?
So, I think you're touching on two important points, slightly different, each of them. First of all, if you look at, there is this perception that this year deal activity has been anemic, to use the same adjective I used earlier. In reality, if you look at volumes, announced volumes, M&A deals, up to the end of April, they're up 8%. If you exclude the Chinese capital injections, otherwise will be up 14%. Now, the number of deals is down, but the announced volumes are up. So there is more happening behind the scenes that at times might catch your eyes.
What's the driver for those deals at this point? Because all the uncertainty is there, but it does feel as though we're seeing disruption in some industries, whether that's technology related or execution related. So what do you see as the drivers right now versus the drivers later on?
I think people are still have looked at files for a long time, and they are thinking that they still have the right opportunity to do something. And in my humble opinion, with valuation having come off a little bit, that helps certain deals. And this week, we announced 3G taking over Skechers. We are totally financing the deal from the debt side. So you can still see large transactions happening. Going back to the point around the interest in Europe from PE firms, we are observing that. There is definitely a sense that at the beginning of the year, the gap, same sector, the gap in valuation between the US and Europe was probably at its widest. Now, that gap has a little bit reduced because US valuations have come off to a certain extent. But there is a perception that Europe offers, especially in some sectors, has some hidden gems, and people are looking for those.
You brought up Skechers. To the point around that deal and what it could signal for others, it feels as though some companies are now being beaten by the cycle. The cycle's just violently changed for some of these companies that were doing very well on the back of some of the COVID trends. For instance, if you think about that industry, everybody was buying athleisure wear. It was a stunning revival for that industry, but now things have changed a little bit, and the consumer is quite conscious as to where they're spending money as they think about inflation potentially lingering for a while. So what does that mean for those companies that were heading in one direction but upended by the cycle? Is that where the deal making is going to continue to materialize from?
No, I wouldn't go that far. I would say that there are some components of your analysis that definitely apply, but in general I would say there are opportunities across many sectors, whether it's technology, whether it's healthcare, whether it's FIG in Europe. There is quite a lot of activity going on there. So I wouldn't simply say consumer goods that are impacted by the tariffs, therefore there must be something happening. There are broader trends at play, in my humble opinion.